Hi, this is Zach here with the Bulletin Board Heroes for St. Patrick's Day on Zach's Traders Cafe. It is Friday, the 17th of March, as you would expect. Starting off with the FTSE 100, where there's a rising trend channel, hopefully at just below the 200-day moving average, the grey line there at 74.25. Want to see as many end-of-day closes back above the 200-day line as possible. Otherwise, it's a range between 73.50 or so and 76.40, which was resistance on the way down. If you look historically, though, the plus point is that in the recent past, when we've had the RSI down at 30 or below, that has been a buying point. That was one at the beginning of September, beginning of October, and then the big one with bullish divergence in mid-October, which gave us 1,200 points on the FTSE, so nothing to be sniffed at. But here, key is to hold around the 200-day line and then build from there. What you normally see in strong uptrends is you'll have a rally through the 200-day line and then come back to test it, to shake out the weak hands and then go up again. So we'll see that hopefully later on the Bitcoin chart. On to the DAX, and here looks like we bounced off the revised uptrend line there from back in October. Beautiful hammer candle yesterday, so the closing almost on the high. Get hammer candle stronger than that. We'll see if that works after the Credit Suisse bailout, bailing out losers and taxing winners to death. That's the policy at the moment. We've got the 50-day moving average rising there at 15,250. You want to see an end-of-day close above that. If you are a bear, you'll probably be selling up to that and then flip around if we get through that 50-day line. But the fact that that's rising relatively sharply does, and we had the hammer candle yesterday, does give us hope that that the worst is over as far as the sell-off from the highs, which actually here wasn't as bad as the one we saw in the FTSE or at the FTSE. On to the Dow, and here it looks as though we bounced off that uptrend line there from back in October. I was trying to work out exactly where the top of the channel is there, but that obviously looks rather far away. The top of the channel heading towards 36,000 at the moment. We're grappling with the 200-day moving average. That's just above where we are, around 32,400. Want to see an end-of-day close above that so that we can get back to the 50-day line, which is where we failed at the beginning of the month again. The price action there helped by the hammer candle there on Wednesday, and hopefully it was a sort of bear trap hammer candle from below the November support. So that has some credibility in terms of turning this market around, which has obviously been rolling over since the end of November. RSI support line, we actually bounced off the RSI 30 area as well, so that is a plus. We've had decent rallies off sub RSI 30 in the recent past, so September, October, then back in June. So again, something that the technical analysts will be looking at and hoping that that will come in again as support for this market. Star of the show by quite some margin is Bitcoin. It's not often that you can say that, but that's what we've had here. We've had the rebound off the 200-day line, almost exactly on it after a gap down through the 50-day moving average. Strong signal there as well from bouncing at RSI 30. We've had rallies from the RSI 30 level, especially in November. That was pretty impressive. That basically started, that was sub 16,000. That started the rally up to 25,000 at the end of last month. Now it looks like we've got a mid-move bull flag breakout, so breaking the high of the other day around the 26,600 level. End of day close above that, and we should be on our way to 32,000 at the top of that broadening triangle, which is also the top of that rising trend channel from back in June. And we could see that I've been predicting by the end of next month, but the way things are going, we might even see that by the end of this month. The reason for the relative enthusiasm is that we've got that bull flag there at resistance, and also we've got a sharply rising 50-day moving average. And if one looks closely, we also have a rising 200-day line, so that's equivalent of a golden cross for Bitcoin. So let's see if it will turn around in the way that we want it to. The overall pattern there from June, a complicated inverted head and shoulders, one could say, and it was sort of bear trap inverted head and shoulders. So if we can get back to 30,000, I think a lot of people will be pretty pleased on that market. As far as the stocks are concerned, the stock related to Bitcoin is Argo Blockchain, and here we've had a very good signal indeed. We had a one-day island reversal, so gapping down and then gapping up, unfilled gap to the upside. We've had a bull flag effectively for much of this week. We've got a rising 50-day moving average as well. And the view now is that at least while we're above the top of that gap at 12.5 pence, we're looking for a move to retest the 20 pence area, February resistance, by the end of next month. Sounds rather ambitious, but that is what the chart looks like with that abandoned baby bear trap rebound. We actually also had an island reversal back in December, and that did work for the shares in a pretty decent way. The shares went from 2p to 20p, so nothing to be to complain about there in terms of the charting signal quality. Onto a stock which I cover periodically, Asiamet Resources. Looks as though it's in a rising trend channel from back in August, bounced off that this week, and an end-of-day close above 1.3 pence would be a gap close buy signal as well, and a bear trap from below February support with a rising 50-day moving average. So really looking for above 1.2 pence, looking for up to 1.8 pence by the end of next month within that rising trend channel. And if you look closely, in fact, the unfilled gap to the upside in January was not filled, which is a strong signal as well. On to Angus Energy, which I know is one of the punters' favourites. Here we had that bear trap below a penny, which was spotted here. We've had decent consolidation at and around the 50-day moving average, around 1.35 pence. Above that, we're looking for as high as 2 pence by the end of next month. The reason for saying that is that we have a rising 200-day moving average, which should push the shares up, and that also suggests that we're the next time the 50 and 200-day lines cross, it'll be a golden cross. The run up to a golden cross is the strongest part traditionally in the cycle. So 2 pence should be on its way while we're above the 1.3 pence level. Double bounce of the RSI on the neutral 50 level, another signal of recovery. One of the better stocks of the year to date, which many people have been shouting about and claim the credit for, is Sizzle. But here we had the big breakout neckline resistance at 2 pence, and we also had a golden cross soon after that as well, effectively a golden cross there. Current situation is that we're looking for a move back up to the top of the rising trend channel from back in September as high as 5.5 pence, and we should see that over the next 2 to 4 weeks, maybe a bit sooner. But if you are a fan of the shares and looking for greater glory, it would be a resistance line projection, which I've just drawn now, and that is heading towards the 7.5 pence, 8 pence area. We could see that by the end of next month as a best case scenario target. Otherwise, we'll just go for 5.5 pence by the end of next month as a very modest target. Should actually be by the end of this month. Only back below 3 pence, really delaying the upside scenario on Sizzle. On to First Class Metals, which had a bit of a rug pull, bull trap through the 50-day moving average, hitting a block of resistance there at 16 pence. But looks as though the support area between 10 and 11 pence, obviously the shares IPO'd at 10, so maybe the interest coming in there as well after the rug pull. But an uptrend line in the RSI window, which is actually bullish divergence. So if you're a fan of that, you'd be looking for the low to already be in, and with an end of day close above the 11.5 pence level, the old February low, that 11.5 pence, that would be a bear trap rebound signal for a return to 16 pence. Onto a stock which I see there's been some talk about on Twitter, which is Future Metals. Here we've actually had a falling wedge breakout, so yesterday and today. Just want to see an end of day close above 4.1 pence, which is where we are now, to then give us the chance of heading up to 5.5 pence at the top of that broadening triangle from the end of January. RSI has been very oversold, so down to 10, so I think they probably cleared most of the weak hands out, and probably everybody else as well. An end of day close above 4.1 pence would also be a gap close buy signal, and we like those too, so that would be a bear trap from below the initial March support of 3.8 pence, but a gap close and the falling wedge break as well, making the shares look rather good at the moment, and only back below 3 3/4, and the resistance line there from February really delaying the upside scenario. On to Galileo, where we had the feeling that 1 pence, or that there was a bear trap below 1 pence, or to 1 pence, which was actually bear trap from below the February support at 1.05, and sort of triple bottom there. Uptrend line there, bullish divergence line there as well in the RSI window. That suggests that we'll hopefully break the resistance line there from October at 1.15 pence, and then head back towards 1.3, 1.4 pence by the end of next month, or a bit sooner. RSI is also broken above the neutral 50 level, which should also help the bullish cause. On to OKYO, which has had a bit of a dance over in terms of the price action over the recent past, dancing with the 200-day moving average. That's there at basically 3 pence. Want to see an end-of-day close above that to give us a chance of 5 pence. If you're cautious, you wait for an end-of-day close of the RSI above the neutral 50 level before considering that the shares have finally found their floor. But 2.5 pence looks to be the near-term support for the shares, i.e. it looks like it's going to hold. Pedro Matata is next, and here we've got a nice little bull flag resting on the 50-day moving average. That is at 3.85 pence. Above that, we're looking for the shares to retest 5.5 pence, which was January resistance. The plus point here is that anything above the 3.95 pence level is a gap close. That gap, rather a nasty gap down that we had in February. So the more time we spend above 3.95, the better for the shares. Moving on to the last three. First one is quantum blockchain, which I've covered quite a lot over the recent past. Here we've got a good support above the 200-day moving average, rather, at 1.6 pence. We've got a rising 50-day line at 1.8, an end-of-day close or a weekly close above 1.8. Should head towards 2.6 by the end of next month. Covered seed innovation earlier in the week, and looks like it's making some progress. We've got a bullish divergence line there, bear trap from below the 1.95 pence February floor, which is good. And also today we've just poked our nose through the December resistance line there at 2.05 pence. Above that, looking for, I suppose, support on the resistance on the way up. Resistance on the way down, rather, at 2.6 pence, and then an ultimate target near 3 pence. Ideally, as soon as the end of next month. It depends how much that bullish divergence will kick in to push the shares higher over the near term. Slow but sure progress with Thor Explorations. Here you can see that we made good on that trendline break that we had at the beginning of the year. Bounced off the 200-day moving average. You've got a rising 50-day line there at 17.5 pence, and we should be on track for 22 pence by the end of next month with this turnaround that we've seen in the stock. There's an unfilled gap to the upside from December as well there, so shares looking as though they're finally getting in gear for a reasonable move to the upside. That's it for me today. More updates during the week.